now an attractive time to buy.
It doesn't need a huge amount of investors to come in order to generate a pretty big step change.
Affordable homes work in reverse. They do very well in rising interest rate environments, and they do poorer and worse in interest rate environments that are coming down.
But it's not like America where there's 300 million odd people.
We are studying the behavior of data-driven investors. Five big property plays that you should be looking at in 2025. We're going to run through across the country and tell you the 5 best property areas, suburbs, and opportunities that I'd be looking at right now if I was buying property. In fact, one of these areas I'm going to reveal I am taking advantage of and trying to buy with one of these opportunities. Curtis, I think the audience loves these ones. 5 where to buy, what to buy, what should I do? Just give me the answer. That's what they want to hear.
Yeah, that's what I'm thinking too. After that intro, I'm like, maybe I just need I'll just buy one of these. This sounds good. Curtis, this is going to be a productive 30 minutes.
Curtis, we both know that you have access to the best information pretty much of anyone because we are the connector point to so many different people. Also, I have worked out, Kurt, you'll find this one interesting, is we are making some ripples that we didn't really mean to, where a few big sort of buyers agents are now trying to guard where they're buying. So they're probably not going to work with us. Sorry, that's fine. I don't mind. Because they view it as IP, and podcasts like ours keep saying what everyone else is doing, and they're just like, this is stuffed, you're hurting my business, where it's just like, hey, you're saying what people are buying, and then you're driving demand there, and then I can't buy it there. And, I've done all the research. I'm so smart. I'm buying in Townsville. I'm buying in Rockhampton. I'm buying in Darwin. Buying in Melbourne. You're so smart. That's what they're saying. And they're like, nope, you can't use any other mortgage broker except the one that we have. You can't use any account except the one that we have. You must use our people, and you must have a signed agreement that you don't talk about it. How nuts is that?
That's hilarious.
Yeah.
Like they want NDAs.
Like they want NDAs. Like, I love that.
Running a spy agency or something instead of just like buying some investment properties.
But the funniest thing is they're buying in Townsville, Rockhampton. Like I can tell you 3 or 4 markets with a little bit more finesse than this because, data changes, things change, and looking at it once every 2 years and just sticking to it doesn't really apply to it. So I found it really, really interesting. Someone's going to watch this and be pissed off. That's fine. But it's really, really cool that we're annoying some people. It's somewhat like, I don't know. It's kind of cool. It's just like, I don't even know how to feel about that, but I do something that we believe in. We're going to talk about these opportunities, and we continue to do these and involve these, and we're just sharing it because that information transparency should help you make your own decisions, and you shouldn't have to be guardrailing, paying large fees, and believing that the withholding of the information is a secret that you don't have access to. It's just something that we don't believe in.
Yeah. No, anyone that's, as a general rule, anyone that's really, really good at their job and adds value to you doesn't normally need you to sign an NDA as part of the process. They're normally fairly comfortable.
Especially where to buy. All right, let's go with play number 1. Let's go with Melbourne. At this point, I will quickly just show you, put in a card to a number of Melbourne videos, a number of specific suburbs, a number of suburb type analysis that we have done already on different podcasts. So this is a more general, everything Melbourne. That's kind of what I'm calling it. Just Melbourne, a lot of it is going to be now an attractive time to buy. People are on the wait. Now I think it's time to be like, you might want to just get a piece of Melbourne now. You are buying at a lower point in the cycle. You're probably buying below peak values still. That's an opportunity. And I think you're going to be positioning yourself for a pretty good 10-year play for a 10-year property investment if you're looking at Melbourne at the moment. And that ticks pretty much most property investor boxes.
Yeah, I think the way I would describe Melbourne is maybe the lowest risk or potentially the easiest one to kind of invest in. Because like you say, I think some particular suburbs, housing types are going to do better than others.
Yes.
But there's just a general opportunity for everything there. So Other markets, you might need to be a bit more specific or selective in what you buy in order to see some uplift. I feel like Melbourne, you should be in a position that you can kind of dartboard it a little bit and you should be getting a pretty decent result.
Yes.
Obviously, you want better than decent, but like it takes a little bit of the stress out of it if you're a little bit nervous or a bit concerned about your ability to really, really narrow down on some specifics. It's just a good general market to have exposure to as of like today.
For sure. So the way it kind of works is the investors are there at the moment buying up stock, and you're starting to see that in the data with stock on market and days on market coming down in investor concentrated areas. But the ripple effect will happen and it will continue to widen out. And because it's a larger market with interest rate cuts on the horizon already happened, one, and more on the horizon over the next couple of years, potential lending changes happening, low value points, you're going to see more and more owner-occupied demand as well. The ripple effect is going to happen. So you don't even need to be buying in areas where there's 20 investors trying to buy at the moment. You can just buy in and around it. That's why it's all Melbourne now. It'll start spreading across. It might even be better buying in the markets where they're not at, because they're going to start showing relative value. So it's a wider opportunity, then you need to be so selective about it at the moment. So everyone, again, they will be saying you need to be really selective about certain suburbs in Melbourne. My clients are buying only 10 suburbs or 6 suburbs or 3 suburbs. Yeah. All of that, horseshit now. Like, am I allowed to swear? I might need to edit that out. Nonsense at the moment. That's gone. Like, that is so 2024. We've done another podcast about inflection points and differences. One of the differences now is it's everywhere. It's dartboarded. You can find so many different types of opportunities. You don't need to be super selective and just buy where all the investors are buying because the data looks good. Of course, the data looks good. You're all buying there at the moment. You're all just feeding the data yourselves. If you're sitting there at a desktop looking at it, the other person next to you is doing exactly the same. You're not special. If you're using a data metric technique, you're not being special. You're doing what everyone is doing. But what is special and what is good to know is there are pockets that have not had any increase at all, don't have that much demand at all, and are at the right point in the cycle that are going to do really, really well. So this is, I think, the premium part of Melbourne will do particularly well, I think, above the $1 million mark, above the $1.5 million mark.
The owner-occupier, the type of dwellings that are owner-occupier attractive, I think, the premium end of the owner-occupier market.
Yes. I actually think it's going to be investors buying that stuff too.
Yes, but I feel like the dwellings that are like going to be in demand from owner-occupier upgraders, people that are moving. I feel like that's the part of the market that hasn't had that uplift of investors flooding into 650, 700K purchases. That is kind of ripe for a bit of a run. That hasn't had any of that tick up yet.
Pretty much. They're sitting 5-10% below their peak values. The affordability, the interest rate change in environment shifts people up the affordability spectrum, where it's just like, I don't want to buy in this cheapy suburb. I want to be buying in a more expensive suburb. Plus, there's a lot of wealth that's been created over the last few years. Plus, there's a lot of people who want to buy in Melbourne that don't buy in Melbourne, that have a lot of money, that will only consider Melbourne or Sydney. Yeah. Melbourne's back on. Like, be like, okay, there's a big attraction to this market point now. I would be looking at the $1.5 million, $2 million Melbourne range. I think that's going to do particularly well over the next few years. Might not start just yet. It's 6 months early, which is the great buying window. That's the best buying window. I'm going to call that.
6 months
early is the best time to be buying. So that is now. We're in that 6 month window for the more expensive sort of stock. Then there's the cheapy apartments. We've talked about this as well. If you're a first-time buyer, you're a property investor, cheapy apartments, I'd be looking at them too.
Yeah, great way to, like you say, if you're starting out with a more limited capital budget, more limited borrowing power, you can get into the Melbourne market and potentially do a little bit of a renovation. Your yields are a bit better as well. So it's a good entry-level way to get exposure to the right market without needing to be purchasing a $1.5 million big house on a big block.
For sure. Old townhouses as well, similar sort of setting. Old townhouses you could be buying and doing fairly well into more expensive areas with planning change. There's so many. There's like 20 suburbs where they're isolated as planning changes, and there's so many opportunities associated with Melbourne planning changes too. This pretty much just rules in everything.
Yeah, it's like just attractive all around. That's why I'm
ruling out CBD apartments and inner city apartments because rents are coming down. That's the bad thing about Melbourne at the moment. in a city apartments.
But that's
I'd
why-
never say buy that anyway. Like,
Yeah.
so
But that's where I think, it's for a property investor, relatively low risk in the sense that you don't have to pick the needle in a haystack to be a winner in Melbourne.
Yes.
You just need a little piece of the puzzle, basically, a little piece of exposure.
pretty much. So that's the property play number one. We are adjusting it around a little bit with new information. That big adjustment is it's broader areas of Melbourne. You don't need to be as suburb-centric anymore. And if you are being as suburb-centric, you're probably fighting over it with other investors. It's probably a little bit too late. You are no longer 6 months
broaden your
behind.
scope a little bit.
Broaden your scope and go to the areas that investors aren't looking. If you can increase your budget, buy at a higher budget point, you'll do better than buying at the lower budget point, because in a falling interest rate environment, this is key. In a falling interest rate environment, that typical strategy over the last 3, 4, 5 years of buying affordable homes works in reverse. I'll say that again. Affordable homes work in reverse. They do very well in rising interest rate environments, and they do poorer and worse in interest rate environments that are coming down. So that is a huge, huge change across many different markets, and it will filter through to Melbourne as well soon.
All right, so that's Melbourne. That's number one. Let's go to number two. You've listed as number two.
Number two,
I
Sydney.
don't know about the order of some of these ones, but number two, Sydney.
Yeah, Sydney planning changes. We talked about this in a very specific podcast as well, went through the full detail. But the biggest planning changes in New South Wales history are 2 lots in Sydney, corner lots with wide frontages in and around these 171 areas I'd be targeting. You could be buying in for $1 million to $1.5 million in that price point, anything from 700 to $1.5 million, doing really, really well. You can look, if you've got a smaller budget, look in Southwest Sydney, look Northwest Sydney, Blacktown, areas like that. There's 171 locations that you can look at. Just find R2 corner lots or wide lots with good shape. I'd be buying this. So if I was starting out as an investor, being like, this would be my first development in 4 or 5 years' time as I grow and become a better investor. That is something that I'd be looking at. It's a good opportunity.
Yeah, I think a little bit or much less of a dartboard kind of scenario than Melbourne. I think you want to be buying a specific type of lot that's got development potential.
Very specific.
You're not just buying anything to get exposure to the Sydney market. You need to be
extremely specific. This one.
Good upside, but it is limited to the properties that are impacted by this. You can't just dartboard it.
Exactly. All right, number 3. What have we got here? Your
This
favorite
is our
city.
favorite.
Your
Darwin.
favorite city. Your favorite city.
Yeah.
Can I call it yours now?
Yeah, sure. My favorite city, despite having never visited. Darwin.
Still haven't been. I get a lot of messages. Hello, everyone from Darwin. I still get a lot of messages from people from Darwin saying thank you. I, again, absolutely making it clear, I do not own property in Darwin. There's no reason for me to say Darwin's going to do well, other than saying Darwin is going to do well because it's doing well. I said
the numbers
that it was going to be there.
The numbers support it for people that are relying on data, and we're already seeing investors move there. Basically,
Yes.
The uptick it's not a future thing; it's a real life, as on the ground as of today thing.
Exactly. Look, we're economists, right? That I don't know if we can call ourselves that anymore. I haven't been one for 15 odd years now, but our background is economics. Economics is the study of behavior. Now, everyone is not an economics-driven investor. They are a data-driven investor. That's the term that everyone's using. A data-driven investor is now who we are studying. We are studying the behavior of data-driven investors. We are studying the behavior of buyers agents who are now the dominant players in the investment scene in Australia. Studying the behavior tells me exactly where they will go next. Studying the economics of certain areas also tells me where they will go next before the data goes in there. It's pretty much a flow chart. Up the top is the economics change, studied by behavior of the key people buying, data-driven investors and buyers agents, and what they look for, and the area analysis of different areas as to what fits and what is changing and what would fit the profile of what everyone's looking at. If you know who your buyer is in property investing, you are doing really, really well. And now you can study behavior. This is what an economics-driven lens gives you. It gives you a different way of looking at it than everybody else. You can now study everybody else and just be like, what are they going to do? It ain't that hard. This is, again, the little funny comment about those that are trying to guard their information, being like, you can guide your information, but I can just tell you where you're going to look next because you're predictable. You've copied the same formula all the time. You ain't doing anything different. You ain't special. I'm sorry to say this. You ain't special. Not where you're buying. You individually are special in how you buy, the deals you get, all of that, very, very true. The execution bit, that is all true. And buyer's agents play an amazing, amazing role, especially the big ones here. But the where to buy, you ain't special. You ain't some sort of economic whiz that goes and buys. You're following some data signals that are very, very easy to follow. And I'm following you or following the patterns that you're going to have next to say that Darwin's going to do very, very well. And Darwin, it is doing very, very well.
Well, Australia's a bit unique too, or not unique, but like it's a population of less than 30 million people. Property investors are normally staying within the asset class.
Yep.
So there's only, like when you go through even the DSR tools and things like that, there's only so many suburbs. It's not like America where there's, 300 million odd people.
Yes.
Bit
harder to
so it is a little bit predictable if you're limiting yourself to property as your asset class. Where are people going to go next? That's where the buyer's agents aren't saying go invest in shares or go invest in something different. They're looking for the next property thing, right?
Yes.
So that's where you can kind of narrow it down a little bit.
Yes.
And yeah, Darwin is the one. My research on this isn't as good as I probably need it to be, but it's the one that on the data metrics looks the best. I don't know if the underlying fundamentals of the economic performance are really there to support it, but to some extent that might not matter, at least in the short run of 18 months to 2 years, because if enough people are going there, it becomes a little bit of a self-fulfilling prophecy.
With Darwin, I've seen enough to make me feel safe. The thing that makes me feel safe is it's at its lowest unemployment level in a very long time. It's had strong employment growth. It's in positive growth territory. There's enough economic data points that tell you in its cycle point it's undervalued. Being like it's gone from significantly more unemployed people than there are today to significantly more employed people. That change is enormous enough to create huge shockwaves to Adelaide, Perth, North Queensland, a lot of these areas. Darwin has just seen none of it because it's below its market price from 10 years ago. It isn't anymore, but in data metrics it still is.
Yep.
That combination is enough where it's just like, that's pretty powerful, potent combination. It is very much like, other areas in that sense that have absolutely rocketed up. It's got the same sort of picture there. And then there's the third layer is there's nowhere else to go. Like all these people studying their behavior, they don't have any other options until they go to Hobart again. They don't have any other options with a 6% yield, 7% yield available in many cases.
And I think the size of the market helps a little bit too.
It's tiny. Yeah.
It doesn't need a huge amount of investors to come in order to generate a pretty big step change. It's not like a Sydney or a Melbourne where a few investors, a bit of investment activity doesn't really raise the needle. If a few thousand investors decide that they want a piece of Darwin, that is massive.
Yes. Do you want to know exactly how many? Everyone want to know exactly how many investors rocked up to Darwin in quarter 4, 2024? Every single month. October, November, December, we have looked at the data, we have looked at the numbers and being like, what is actually happening? How do we find this, right? Like, how do you find this data? Okay. You can't just call every real estate agent. They'll tell you the anecdotal story. Oh, there's so many more people calling me from these areas. Or I'm seeing it on the ground at open homes. I don't know if that's happening because it's all Sydney, Melbourne people just buying in Darwin. But what you are seeing is the number of investor loans. Specifically, how many investors are purchasing a particular home in Darwin. Now, if you go back through a 10-year period, over the entire 10-year period, it's always, every quarter, it's sat at between 100 to 250. That 250 is, the number of quarterly transactions that happen. So 80 every month. 80 property investors are buying a property in Darwin every single month. Over the last 10 odd years, you look at data, those numbers will look a bit different.
And that's the peak point. 80 is like the best months you've seen over the last decade.
Yeah. I think I looked back over the last 4 or 5 years just because it's more relevant. You see, the number of quarterly transactions in around 200. Haven't ever seen anything with a 3, ever. Like there's at no point there's been more than 299 people that invest. I think it was like 260 or 270. Last quarter, there was no 3 as well. We skipped all past that. There were over 400 people who went and purchased a property in Darwin. That is an extra 40 people every single month purchasing. Is that right? It's even more than that. You have 80 and then you go to 130. It's an extra 50 or 60 people every single month purchasing a property in Darwin than otherwise. Darwin is a tiny market. There's only 1,200 odd listings there. And out of nowhere, 150 property investors have gone and purchased properties in Darwin in a single quarter. This is quarter one of that data metric that we talked about. Quarter one. By next quarter, it's going to be more than 420. And the quarter after that, that momentum's going to come in. Everyone's going to just start flocking over, and it's going to sit at 500-600. I don't even know if that's possible because the market might be so small where it's just like, there are no properties. Everyone in Darwin is going to be like, there are no properties. That's going to be the media headline being like, Darwin suddenly lost its properties. Yeah. This is the dumbest narratives I hear all the time where it's just like, there are no properties. It's just like, no, there's just people that have come in. The number of properties in Darwin, the population isn't surging. There's no population increase happening there at the moment. The number of properties there have served its people for a long time. But right now, it's going to go into the situation where the media is going to be like, what? Huge housing shortage, huge housing supply shortage, because they're going to ask some economist nerd that goes in there and being like, tell me the answer for this. And they're going to say the supply and demand dynamics are a bit different. There's clearly not enough properties. No, the reason why this is happening is because these data-driven people are going there. That's the actual reason. Demand has shot up.
Yeah.
Hopefully not because of this podcast, but demand has shot up in Darwin at the moment.
Yeah. And like, I think you've unpacked that pretty well. The size of the market, all those factors mean it's got the potential to kind of be the outlier performer on the upside.
Yes, it will be.
Yeah, yep. Over the next, 12 months. Yes. It's got a lot of things going in its favor, and the size of the market allows for it to have quite significant percentage increase in price quite quickly.
Yes.
That other markets might struggle to just have the fundamental,
yep.
The bigger your market size, the harder it is to pull that off. Darwin's ripe in a number of different ways there.
Yes. I think it's at its early point in the cycle. So if you're a property investor, I'd be punting some money in there. Just punting, basically. That's what I call it. I think it's a good punt. It's somewhat safe because of its employment story. Yep. And it's really, really cheap. I think you do really, really well. I think it's a quick 100K. That's yep. what I'd call Darwin, the quick 100K. I think it might be a quick 200K, 250K. I think Darwin's in that basket, and it's probably the only one left now. So that might even fuel even more numbers to rock up there. And we're recording this before the February data release comes out, but I'm expecting Darwin to be the number one capital in Australia once the monthly data comes out and has overtaken every single, because it was dead last when I first said it, it's going to overtake every single one to go to first.
All right.
Hot market.
Number 4.
Hot markets.
The very hot markets.
Yeah, we've got North Queensland.
North Queensland, still probably the most talked about place that when I'm talking
yep.
to investors that are trying to buy.
Anyone pivot down? Has there people started going down the North Queensland thing, down to Rocky and
yep.
Mackay?
Yep, Townsville too hard to buy in. That feedback is coming through a little bit. So, yep, Rockhampton, Mackay. No, not much in Cairns. Gladstone.
Yep. All of these areas, yep.
Yep, all of these areas.
Yep. So we've talked about this one. Shout out to Matthew Wilson. If you're buying in these areas, Matthew Wilson, on-the-ground specialist in Mackay, absolute whiz. He should be the point of contact. We've done a podcast with him, which we'll reference here as well. You might want to speak to him. He's very, very good. Adi Adalaya also purchases a fair bit in the Townsville market in and around there. It is very hard to buy. He's mentioned that, but knows that market particularly well because he's bought a whole bunch of properties there as well. So a couple of different people to speak to there in North Queensland. The last one I've got here is regional blocks of apartments. Does this sound a bit weird?
Yeah, this is your speculative one. I like it.
Yep. You're looking at me being like, where'd this come from, Rita? Where'd this come from? I'm not going to lie. I had 4 as of an hour ago, and I was like, 4 property plays doesn't sound good. Let's come up with 5. And then I added this one in. Regional blocks of apartments. So in certain areas where regional metrics look pretty good, so I'm looking again, regional Victoria particularly, in some of the pockets surrounding Melbourne, I think you might see demand spill over there. You can get 8-9% potential yields for blocks of apartments where the land, where the building is kind of given to you for free. You can do a quick little reno on it, and then, that doesn't cost the same as rebuilding the whole thing. So you're getting an opportunity. It's kind of like an arbitrage opportunity in getting the building for free. And it's a block of apartments. Like, there's a good yield there. You get an 8% yield. And the building is giving you the yield, not the land. So it just seems to be a good arbitrage opportunity where you can buy a good value opportunity of today.
All right. A block of apartments in Ballarat. That one I'm the least sold on of all these 5. But all right.
Geelong, Ballarat, Bendigo. I'm not so sure.
Yeah.
I'd be looking at Mildura. I'd be looking at the data stats. I know Mildura is really, really far away from Melbourne, but I'd be looking at data stats of regional areas, Wodonga, Albury, blocks of apartments in regional areas across the board. I think I'd be looking at.
Yeah. I mean, they are a bit more affordable. I would, if you can get a block of apartments in Melbourne, a small block in like the outer suburbs of Melbourne, I think that's a little bit more potentially golden. But sure, why not regional?
Yeah. Didn't want to say Melbourne again, so yeah, let's go regional Victoria, I think. And these areas, it's because the yield is so strong and the building value component is a bit weird at the moment. You can buy a house there for $600,000 where the house is worth not much. You can buy a block of land there for $570,000, or you can buy the same block of apartments for say $750,000. But to rebuild those apartments, it will cost you $1 million. Like to rebuild an apartment building, it'll cost you more than that. The opportunity is just like, oh, why don't you just go buy that and then tidy up the apartment and make it a 10, 11% yield? It's just a good opportunity to accelerate your property investing. If I was starting out, I'd probably be buying this opportunity. And Darwin sounds a bit weird. Like, sounds really crazy. What are the two things that you're buying if you're starting out? Blocks of apartments in regional areas and Darwin. And I might throw some Melbourne exposure if I wanted some buy and hold investing in there too. So yeah, bit of a crazy idea that we've thrown out there. Yep. Not much. Curtis is just staring at me being like shocked.
Yeah.
We'll wrap it up there. There's 5 opportunities that you might want to look at, 5 areas that you will want to pay attention to help your property investing in 2025.